Hello everyone, K Kim here with the Traders Club. Welcome to the market update. Today is September 1st, 2017, Friday. Market should be open another hour or so as I record this video, so you should be seeing some flashing lights on your left. Hope you had a good week trading thus far. We do have a Labor Day weekend. Labor Day holiday is on Monday, so the market should be closed on Monday. We have a 3-day weekend here, so hope you guys are excited to spend a long holiday weekend. Especially for us traders, man, we do need to take break from the market. I mean, those people who say, man, I wish market was open every day, God, I cannot, it's because they're just anxious every single day. They've been losing. They just can't get away from the market. You do need to get away from the market. You do need to refresh your brain and rejuvenate and come back more, in a better state of mind to be able to make a logical decision, right? So I am very welcoming this long holiday weekend. Just completely stay away from the computers and the market noise. And I think it's ending the week, starting the September strongly here. I am very, very pleased to see what's been happening on Spider and Russell 2000, and this is kind of really what I would expect though when we're in an uptrend. Sooner or later, obviously we don't know exactly what point, what level the market is gonna bounce exactly. Nobody does. Nobody can truly pinpoint, oh, this is gonna bottom. What we only can do is we can observe and come up with the possibility of a strong level of support, right? So if you don't, some of you, those who are following my moving averages, my 20 MA now is, let's see, I'm pretty sure it's back at close. My 20 MA is at close. So my 20 is at normal close now. My 50 is still at the setting low to accommodate, recent moves right here. So my 50 MA is that pink dotted moving average is setting at low. 20 MA setting at close. 50 MA setting at low. 100 SMA, you see that 100 is setting at high. So those will be, I know some of you, I get emails and stuff, you guys have been following my moving averages. That's my moving averages are set up at this point to accommodate recent price action. You can see that 100 setting at high has been acting as strong support. I talked about them in the last market update video, and also we talked about how we have established this new channel, right? So everybody started freaking out when it broke the support. Again, we talked about it that a lot of times it does break support or uptrend line to establish another or different one. And it happens many times when we're in a strong bullish uptrend like we're in on the S&P 500 and the overall market here. So obviously sentiment as of today is bullish. All terms, minor term, intermediate term, and primary term as we stay above 20, 50, 100. That's a very basic analysis there, right? But if we understand just what really happened up here is that this was a level that I was watching closely, that gap area. What really happened was that gap down area, and that, because that gap is actually open, right? Right here, this gap, 246, 245, that gap is actually open. Look at this, is 65-minute chart. You can see that gap has not been filled. And people always say stuff like, well, the gap always gets filled. No, gap doesn't always get filled. What are you guys talking about, right? Gap doesn't get always filled. Gap, look, what about this gap? That didn't get filled. What about this gap? That gap didn't get filled, right? Gap doesn't always get filled. The less time it doesn't get filled, the better it is for the overall trend, or at least the direction of that gap. So you see that these remainder gaps, the longer they stay open, the better it is for overall trend here. So anyway, so we got this gap down. There was a crucial gap down, obviously, because it was a gap down, and then we saw that flush, and this was when everybody started panicking and freaking out, and the bears are starting to have a party. And then we start to fizzle here. Sideways move above the 100 SMA. We're still in the higher lows, higher highs, and an uptrend. Got up here, we gapped up. See that we gapped up right here, right? We saw that we gapped up. So we actually threw island reversal. It's not like a perfect textbook, but definitely the sentiment is there, right? Gap down, gap up. We holding above it. We pretty much holding up that crucial lower high. This was that lower high that all the minor term the minor term sentiment shift to bearish when we cultivated the lower high, right? So we got a lower high, lower low on this minor term. And then we finally got what? We actually created for the first time. This is a higher high in the minor term. So we are bullish in the minor term. We're bullish in the intermediate term. We're bullish in the obviously primary term. So looking into kind of forecasting next week, I believe that it will, we may see a pullback to retest these levels. The worst case scenario, possibly fill this gap and maybe retest. That would be like the worst case scenario. Maybe even come down, retest this bottom support. But I think I think if we do see a pullback, I think we're gonna hold 246, 245 before going back up. And we'll probably hit this resistance. I have a feeling this time though, that we may break out of this and then get to about 255. That's kind of my next target there. And then pull back and then starts kind of fizzle. And again, this is important level we're gonna watch before getting to maybe 260, right? So that's kind of what I'm forecasting, maybe whole month of September. But next week, I think we'll get up here and then we'll start to see how it deals with that rising uptrend or rising channel resistance there. But if you shoot a price pullback, we want to see price holding at least 246-ish level. But I think 247, 246 in that vicinity, I think that's going to act as a minor term support there. Let's continue with Russell 2000. Russell 2000 pretty much V-shaped higher. We've been seeing relative strength versus Spider, even right here. You can see that right there, just kind of going up. And when this thing did pull back, we pulled back to that rising kind of a channel support, faked everybody out, and then just V-shaping higher here. There was that support. The support gap has been filled now. We're actually holding above 100 SMA here. 100 SMA has been the crucial level for some time since June. You see that 100, that's 100. You see that thick blue moving average. This was 100 right there. It's acted as support. This was 100. We trying to find support there. We lost it. We gapped down, and then now we're back above it. But just getting slightly above it doesn't mean a whole lot. But 100 is essentially actually rising slightly here. We got 100 rising, 200 slightly though. We got slightly rising, right? And so you can see that 20 starting to getting back up here. So what I think, now that we got this out of the way, now that we scared the crap out of all these amateur players and these short-term traders, and now that we not only just amateur, even so-called expert, we scare everybody. So how many times people are saying when this thing broke below it, how many experts started coming out writing articles saying that, oh, this is a cautionary signal, the small caps could shake the whole market, right? Now that Russell 2000 pretty much shocked the world, I think most traders, investors are pretty much stunned at this point. I think there's a good chance. I don't know what. We'll get to 155. Yeah, so I think 155. I have reasons to believe that on my targeting strategy that 155, even 162 is possible before this year end or first quarter of next year. And I think once this thing breaks out of this range, which I think is going to, we got the major trap here. So that's kind of what I'm targeting here, 155, 162 going into end of this year. As far as what's going to happen possibly next week, I think there's a good chance we could just keep going higher. Because of this was that massive trap, there's a chance that it could keep going higher. If we should the price pull back though, we want to see 138-ish level hold. Pull back, hold, and get back up there. Let's see how that plays out next week. We'll follow up. Q's just made new all-time high print there. Got a gap up above this resistance here. We gotta get benefit dial, even Q's. I mean, we got higher low. I mean, that low is definitely higher than this low. This low is higher than this low is higher than this low. This low is higher than that. What does that mean? It means we're on an uptrend. Well, okay, but it's been up so much. Can it really go higher? Yeah. I mean, I don't know when when the Qs is gonna come down. I mean, I don't have any positions on Qs itself. I mean, I do have positions on the tech sector, but I don't have Q because it's You know what I mean? That doesn't mean that I'm gonna go long here. It just means that I cannot start shorting just because it's been up too much, right? So I thought maybe we might be, if this thing would have come down right here, right? Then I think there's a things they could have been a little bit more worse. Then, you know, we had the equal lows here. Maybe then we're starting to form some kind of a topping pattern or consolidation, but it didn't. It actually stopped short, cultivated a higher low. That's what we're calling an uptrend, higher lows and higher highs. Everybody knows this. Everybody knows what uptrend is, higher lows and higher highs. Yet it just, it just baffles me when just, it's because our money is tied up. And just everybody starts to act so emotionally, and that's not a good attribute of a trader that you want to have if you're acting emotionally when the market starts shaking back. When the market shaking back, and I've been teaching this, I practice what I preach. You guys know that. When the shaking back happens, when everybody starts to freak out, you always look for opportunity. But obviously, you gotta know when to do this. When there's a time and place where when market is shaking big, you be cautious. There's a time and place where market is shaking big, you look for opportunity. Looking at Dow Jones Industrial Average, obviously that 50 MA acted as support. We got above 20 MA, pretty much been working picture perfect, technically speaking, right? That 20, that 50 MA has been strong support. We, you know, this thing finds support at 50, gets up. We loses 20, it finds support at 50. It gets bugged, we comes back down, where it finds support. 20, where it finds support. 20, where we find support. 20, we loses 20, where we find support. 50. I mean, Dow Jones has just been a picture perfect technical as far as the technical is concerned. It's just been respecting all this level picture perfect. So this is why these moving averages are very, very important. And some, again, nobody knows if when this thing started coming down like this. Oh man, there's bearish engulfing. What do you say? Are you gonna say that, yeah, we're coming down, it's gonna go to 200? No. Say, well, we still have a rising 20 MA. I don't know if it's gonna break or not, but I want to give benefit of the doubt, at least for now, at least for the next couple of days, because we have rising 20 MA. But let's say if we lose that, then we got 50 MA down. That's how you do your analysis, and based on your analysis, you gotta find your risk and reward, your level to entry, and all that stuff. And then you can see next day we held that and continued higher for a while, right? It came back down a little bit, but kept holding. And then finally we broke, and then we're holding again. Right? We got rising 20, rising 20. So as long as they continue to have 20 rising, 50 rising, 100 rising, we have to give benefit of the doubt to the buyers. I don't know when. I don't know when it's going to come down and retest 200. Nobody does. We continue to give benefit of the doubt to the buyers, right? Let's see here. Let's go to transport. Right, transport actually started to see a lot of volatility here, but you can see if I actually go to big picture of things, we are holding this primary term uptrend support there. It's a little bit of vulnerable look because you can see it's going to be choppy here. We made a higher high, but it got a little bit hectic here when this thing started to really consolidate a little bit, and then when it got up, and then, you know, just we're still in this kind of a volatile zone here, still kind of a range bound, right? So but that's what kind of transport does, though. I mean, transport gets a big move like this, and then you're gonna see some shakeout range bound, and then you get a big move, shakeout range bound, right? You get a big move, shakeout range bound, you get a big move, you're gonna shakeout range bound, and then kind of start to get an uptrend a little bit more here. So that is kind of a characteristic of transport. We're still in an uptrend primary term. We're starting getting back up here. If we can get above 169.89, maybe come and fill this gap here. As far as the transport itself is concerned, it is constructive. It is a constructive move to the market. Market moves sideways. That's what you call consolidation. Doesn't look like a topping pattern because it looks like we are holding that low. That's what we call what? Higher low, higher high. It may be lethargic on this move. Maybe it's gonna be forming a channel, but regardless, how it's gonna move, we're still, you can see right there. I mean, it could still possibly do something like that. But that's an uptrend, right? So overall, there's no like warning signal at this point on the transport. I would say there's a warning signal if this thing starts to get below it. And then we continue to cultivate this lower high, lower low. That's a warning signal. If it gets low, but it's because we have cultivated a higher low, I think it's starting to look more constructive as of today. One last one, I'll let you guys go. Financial sector here. Financial sector, obviously, it's always kind of fun to reiterate what happened here. Head and shoulder pattern. How many people freak out, right? How many people freaked out and thought that this thing is going to go to 20, right? And that's, the market is going to give you the scare before moving. It's never easy, never pretty, right? Even right here, how many people do you think was watching this support? It gaps below it, freaks everybody. Everybody's stop is just right here. Maybe they got automatic stops putting in there, got triggered, a lot of shorts start shorting, and then it gets right. But if we actually go to line chart, it never broke below that. So sometimes it's actually good to look at a line chart and not to get emotion involved on intraday price action. If we go to line chart, you can see how they perfectly lined up with the old resistance, new support. Same thing happened right here. Perfect. Picture perfect. You wanna know how technical analysis book can be established. This is when you look at a line chart, you can look at that. Oh, old resistance, new support. Huh, that's perfect. Old resistance, new support. That is a perfect technical analysis just playing out. But when we go to actually candles, you can see they drew perfectly right there, right on that candle. And then when this thing came down, everybody starts to freak out because they're so precise with these lines. They gotta give some room. You're choking your positions to death. You're choking yourself, trying to, okay, yeah, my stop is just below it, because you're trying to grab every penny from the market. So what you do is, yeah, I'm gonna put my stop, right there, man. I cannot take this, man. I'm gonna put myself right here. Yeah, I went long right there, but I'm gonna put myself right there. And then next time when it does it, yeah, it broken below the support. Broken below the support right there. Close it out. I'm gonna start shorting now. And then next day, boom, right? Well, they forgot to look at a daily line chart. Actually the support was right here. See that? So technical analysis is not a technical analysis just because you draw stupid lines. You know what I mean? Like I always say, technical analysis is easy to pick up nowadays because there's so many free charting software you can get with your online brokerage firm, right? Anybody can go up and write these, draw these lines. Just because you know how to draw a couple lines doesn't mean you understand technicals. It's easy to pick up, hard to master. There's so many. The biggest thing is always prioritizing what's important in your technical analysis, right? Always understand big picture, right? The primary term, the intermediate term, and minor term. You always want to give benefit of doubt on a big picture first, that what is more important data before getting emotionally stirred up. Because once you start to get emotionally stirred up in the market, because the market is going to shake and bake, the true technical analysts would not let that recent shake and bake to stir them up emotionally, because what happens is now you start to, when the market is doing this like that, you start to become more cynical because that's all you see. You see everything red. That's what a lot of times happens. And when the market is bullish, everybody tends to be bullish. When markets tends to be bearish, everybody tends to be bearish. People are always chasing. People are always chasing. People are chasing the market are the ones that are always going to get burned. You don't ever want to chase a trade. And like I said, when we're in a strong bull market, when everybody's optimistic, you start to be more pessimistic. When everybody starts to be fearful and freaking out, that's when you look for opportunity. That's how the market works. That's how the market is designed. That's what separates from a seasoned, well-trained traders from amateurs. Amateurs they're gonna perpetrate, they're gonna pretend to be an expert, but when the market is shaking, they see what they're saying, they start to freak out, they start to get scared of the market. Those are the one tends to be not understanding, and a lot of time, I mean, think about it. Just go back and see how many people When this thing did this here. So when market did that, how many people, maybe even yourself, thought that this was the end of it? This was the end of it. This was the end of Spider, that we're going to 220, 240. I mean, was it possible that we could? Anything is possible in the market because it's the market. It's life, just like your life, my life. I could die. Is that possible that I could die tonight? It is possible. The probability of that happening is very, very slim. Anything is possible. But if we understand that this kind of things happen all the time. I have a video that I've done, the video lesson, that the market is designed this way. And I talked about this the last, I think, a few weeks ago. Market needs new fresh of supply, and they need amateurs to sell their stocks so the big boys can buy, right? And what about here? One last scare they did, right? Right about on this day, right? Everybody was looking at this downtrend resistance. Market knows that. Market knows that everybody's looking at this downtrend resistance. What does it do next day? It gaps down. A pretty big gap down. Futures are tanking. Everybody's freaking out. Bears start laughing. And then what happens? This thing gaps. So how many people do you think start to go on their short positions or start closing out their longs? And then this is how it reversed. So how many fake out was there? We saw that at one fake out where it broke below it. Looked like it's gonna go up higher. It faked the shorts, and everybody started, closing their short positions. And then there's a downtrend resistance. It gaps down, also fake everybody out, and then it finally moves. Just go back and study every single pullback. There's always shenanigan. There's always this gap ups, gap down, shenanigan, gap down. There's flush, and then it gets back up. Same thing happened here. Oh, it's all going up. And then we just out of nowhere. I mean, this thing looks like, just making new all-time highs. Yeah, it looks like this thing is ready for a move. As of nowhere, we get this huge gap down and a flush. And then reverses. Are we learning yet? I got the line from Terminator 2. Have you seen that movie? Terminator used to, when I was growing up, Terminator was one of my favorite movies. Terminator 2. And you guys, if you're old enough, you will know what I'm talking about, right? Terminator 2. Are we learning yet? So I don't try to presume to know everything. I'm still, there are many things that I'm still learning as I go. But some of these are just basic things that happens in an uptrend. The market is designed to just stir you up, knows exactly which button push. And then we're up here. Just how many people are stunned by now, right? How many people are stunned that Russell 2000 up here? How many people did really call this, that Russell's going to be up here, right? Really not many. That's the reason why not many people truly can participate and truly make money in this market, right? That's why most people are short-term trader. There's nobody, and I say this proudly, there's nobody in a Twitter and stock twist that I can go and learn, because everybody is short-term day trading, swing trading. Why do they do that? Because they don't really know what's going to happen next 4, 5, 6, 7 months. The market is going to happen. That's why they can't stay with it. I'm the only guy, and that's why there's nothing I can learn from anybody else. And I'm proud to say that I'm the only guy who can able to trade this market long term and able to forecast long term, right? So at this point, this kind of things up I see all the time. I mean, this is what the market does. It just fakes everybody out all the time. So anyway, have a wonderful weekend. Good luck trading next week.